Hi guys, Raj here. If you've always wanted to know about Fibonacci retracements, then this is the video for you. So I'm going to do a really quick short lesson about how to draw Fibonacci retracements in line with a trend, and let's hope you get something out of it. So let's get this going. So you can see here I've got euro dollar up. So it's been in a nice trend on the monthly chart and on the weekly chart, all making higher highs, higher lows above the moving averages, etc. Okay, that's not why we're here though. We're here to look at some Fibonacci's. So how to draw a Fibonacci correctly. So this is a previous example that I'm going to show you. So imagine that this is what you're seeing on your 4-hour chart, and this is the price today. What you need to be doing is you need to take the Fibonacci retracement tool. You need to put it from the swing low of the chart all the way up to the swing high, and then this gives you the Fibonacci numbers, okay? So it starts with 0, 23.6, 38.2, 50, 61.8, 76.4, and 100, okay? Now, usually, we don't, if something goes past a 76.4, you could say that this trend could be turning to the downside. So just bear that in mind. But I'm going to show you this particular example, and then I'm going to show you one of what's going on today, okay? Because I don't want to talk about things in the past. I want to show you live examples as well, okay? So here we've got euro dollar. If we scroll through this chart, you can see that this 50 Fibonacci level has been used. So the red one right in the middle. The price then bounces off it, it retraces off it, and then pushes up. So that's why this is called a Fibonacci retracement. And you can see then we get a subsequent move higher and the market breaks to the upside. Okay, so that's what you need to be looking for. Now, you don't draw another Fibonacci retracement until the market obviously retraces. Okay, so you can see now we've got a bit of a retracement phase. So what you need to be doing is looking for the previous swing low to the swing high, drawing a retracement and seeing if it continues on. So I'm not going to look at old ones now. I'm going to look at a current example. So let's check this one out. So if you're looking at the 4-hour time frame, a very short-term retracement here could be the move from there to there. So let's have a look and see what's happened right now. Now, I really don't know if this is bounced off the fib line, but you can see here, it's come here, hit the 76.4, and then pushed up really, really nicely. So this was a good example of a Fibonacci retracement. Now, if I'm going to just increase the size of this chart, and I'm going to show you the whole total move of the fib, and then how to draw them in an uptrend, and how to, when you know the fibs need to change direction, okay? So here you can see this whole trend. You could have a fib for it from bottom to top. This is a correct fib, yeah? But if we're going down on the lower time frames, like we just spoke about a second ago, so I introduced you to a small fib from this wave to here, that would be the correct fib for probably an hourly chart. So let's go down to the hourly chart, and you can see here that it looks definitely like it's the correct fib, and we're measuring this wave here, bounces off the 76.4 and moves up. Okay, now the reason why it's the correct fib for an hourly chart and not for the higher time frame, the 4-hour chart, is because this one has already had a retracement, and you can see here that I just need to squeeze this chart a bit more to make it a bit smaller on the downside. There we go. That you can see here that this wave would have already been measured, the market would have bounced off it, and it would have come back up. Okay, so it's very difficult and hard to know sometimes with fibs where you should be drawing them, but basically it's the current wave swing low to the current wave swing high. So in the current example for today, this is the right one. Okay, from here to here. If you were on a higher time frame, like we were on the 4-hour before, it would obviously change. It would be that whole move here would be the Fibonacci for the current move. Okay, so I hope that makes sense. And remember the levels. I'm just going to put them up on the chart again here for you. So let me just move to an area to kind of show you them without any prices in the way. Here we go. And then I'm just going to get rid of this little fib here. Here we go. So you got 0, which is obviously the bottom line, 23.6, 38.2, 50, 61.8, 76.4, 100. Now these ones here, the 127.2, 161.8, they're called Fibonacci extensions. We can discuss them in another short, but these are the ones here for Fibonacci retracements. So I hope that makes sense, and I hope it's easy to understand.